everyone, it's Erin with Orion. We're going to go ahead and start our down payment assistance and grant training. Just a couple of quick facts about Orion. One thing you're going to enjoy in working with us is our very experienced team. I have about 20 years experience in the industry, as well as our underwriters have over 20 years experience each. We feel that is very important in today's market, being able to navigate challenges and knowing how to get these loans to the closing table smoothly. We also have very competitive pricing, superior technology, and a free broker marketing studio, which I'm going to give you guys a sneak peek into that here shortly as well, and a wide range of other programs. As far as our DPAs and grants, what we're going to cover today is why originate these, how they work, the forgivable versus repayable, the loan cost, funds to close examples, manual underwriting, and of course our marketing studio. Originating these is going to allow you to help more borrowers, close more loans, as well as get new referral partners. And what's special about Orion's program is our FHA DPA goes down to a 580. We go down to 620 with our conventional grants. And we also have assistance for closing costs for USDA down to a 640. We do not require that they be a first-time home buyer, although they can be a first-time home buyer. All occupations and income levels, we have options for all of those. Non-occupying co-borrowers are allowed. The DTI is simply per the DU, except for the lower FICOs under a 600 for FHA. Those are capped at 45%. We even do manual underwriting on FHA, which is important because a lot of these DPAs with the higher CLTVs will refer. And we'll go over those guidelines as well. And we have FHA up to 2 units and conventional up to 4 units. Our DPA is handled entirely in-house. We do not have to package these up and send them to any outside programs. We do not run out of funding on these. You're going to have direct access to seasoned underwriters who know how to get these to the closing table smoothly. Our technology is going to structure the DPA and the grants for you, so you don't have to worry about how to input these in your LOS system. You can just pull it in, select the down payment assistance or grant program that we're going with. It's going to put that into the file, set that up for you. We're going to do all of the disclosures for you. If you're doing down payment assistance, there will be a a disclosure package, an LE, a CD on both the first and the second. We're going to handle all of that for you. So basically, when you're trying to qualify these borrowers and decide who is a good fit, it's going to be anyone who meets traditional, conventional FHA, USDA guidelines, but they're just lacking the funds for the down payment or don't want to use their funds for the down payment. This is not for somebody who would not fit FHA guidelines due to credit history, something like that. You're looking for credit-worthy individuals who just want some help with the down payment. How down payment assistance works, now we're going to cover both down payment assistance and grants. How the down payment assistance works is it's going to pay, if you're doing FHA, it's going to pay their entire 3.5% down payment in the form of a second mortgage. So for down payment assistance for FHA, you're going to have a 96.5% LTV, 100% CLTV, and the second mortgage is either going to be repayable or forgivable, and we'll look at the differences of both. So repayable down payment assistance is going to have monthly payments on that second mortgage that do have to be included in the DTI. This works similar to any other true second mortgage, whereas a forgivable DPA is more like a soft second. So they're going to have that included in the CLTV, but there's not going to be any payments on that second mortgage, and it is forgivable after 3 or 5 years of on-time payments on the first mortgage. It will be forgiven. With repayable DPA, the trade-off for having that second mortgage payment is that the pricing is way more likely to have a nice lender credit, reducing what the borrower would have to bring to the closing table. They may not even need any funds at the closing table, depending on how it's structured and how the pricing looks the day that you lock. Whereas forgivable DPA is more likely to have a much lower lender credit than repayable, and sometimes, depending on the date and the pricing, it could have a discount, which is going to increase their funds to close, making seller contributions really, really essential on forgivable down payment assistance. So switching over to grants, how do grants work? So grants do not have any second mortgage and they have no second lien. So your CLTV is going to match your LTV on these. So FHA will be 96.5. Conventional, you can go as high as 97% with up to a 3% grant. We have 1, 2, and 3% grants available for conventional, but these are not going to have a second mortgage to include in the CLTV. There's not going to have a payment to include in the DTI, and there's no second lien. These grants are forgiven after 6 months of regularly scheduled on-time payments on the first mortgage. The pricing, because it is a grant, is going to have a much lower lender credit than something like repayable DPA, and it's possible that it could have discount points, making it, again, very important that these have seller contributions on the contracts. So what are the costs of DPA loans and grant loans? They're very similar to any other loan you originate. You're going to have your compensation. If you do borrower paid, you can go up to 2.75. We do have options that allow lender paid compensation up to 2.75 as well. You're going to have your lender fee, which is $12.95, your normal appraisal and inspection fees, and your normal closing costs and prepaids. You can charge a third-party processing fee. And then sometimes, depending on the date that you lock and what program you select, there could be discount points, and we're going to look at some pricing examples. These costs can, of course, be covered by seller contributions. I highly, highly, highly recommend that you do get seller contributions, because a lot of the times the borrowers who need help with the down payment also need help with closing costs. FHA allows up to a max of 6% on seller contributions. Of course, if they have their own funds for closing costs, that's fine. You can even combine these with outside grants and DPA programs. Gifts are eligible per normal guidelines. And if they have a lender credit on the lock, certainly that can go towards closing costs, or any combination of the above. So on these presentations, I update the pricing every couple of weeks. So this may or may not match today's pricing. But so if you need a login for our quick pricer, my email address is on the left side of your screen. Shoot me an email. I will get you a login. You're going to jump into our quick pricer to price these. We do a lot of DPA. We're fully delegated on this. This is a huge niche that we do. We're very good at them. So we have a lot of different programs to choose from. Don't get overwhelmed by this. If you guys need help determining which program your borrower should go in, just give me a call with your scenario. We'll talk about which program they're trying to go under, how much they have in seller contributions, any challenges that they have with funds to close, and I can help you determine which program would be best. As you see on the pricing on the right side, the program that is going to have the most lender credit is going to be our repayable boost. Now on your screen, and when you price these in our quick pricer, it's only going to show 3 rates. We have way more rates than that. It just collapses them down so that it's a little easier to look at. If you click on show all rates, it will expand it out and show you a full range of rates for that particular program. But I do want to look at some examples of what would be needed for funds to close for each. The repayable is going to have the most assistance towards closing costs, then the forgivable DPA, and then down to the grant as far as when it comes to closing costs. So let's take a look. First, we're going to look at the Elevate grant for FHA. We're going to do the 3.5% grant. As you see here, 7.75 is pretty much par. It has a $400 discount. So let's take a look at what the borrower would need to bring to closing with that program. So we're going to price a $500,000 purchase price with a 680 score, and going by the pricing you just saw on your screen, the 7.75, there was a $432 discount, our normal lender fee. Let's say you're doing borrower paid compensation at 2.75, and then let's just use $10,000 for closing costs and prepaids. So your down payment is covered. The 3.5% down payment for FHA is covered through the grant. What's not covered are these other costs listed out on your screen. That's going to total 25 grand on this example. So somebody's got to pay that, right? So I highly recommend as much seller contributions as you can possibly get when you're looking at grants. If they just got 5%, FHA allows up to 6%. If they got 5% on this scenario, they would only come to the table with $477. Let's say they were able to only get 3% in seller contributions, which is 15 grand. The borrower would come to the table with 10 grand, or it could be a gift, or it could be outside assistance. But what you want to remember when you're looking at the grants is they are not going to have the hefty lender credits like repayable down payment assistance does, because this is basically a gift, the grant is, and that comes at a cost. So the down payment is covered. You need to account for the rest of these costs. And I highly, highly, highly recommend when your borrowers are out there looking at properties to tell their realtors that they want a property where you could work some seller contributions into the contract. Now let's go back and look at a forgivable down payment assistance. So in this pricing example, I'm going to use the highest rate available, which is 7.75. Keep in mind, you guys do have a full rate stack on these. You have rates in the 6s that you can look at. Those are not going to have as much lender credit, but those rates are available. So if you have hefty seller contributions and you want to buy down the rate, they are more than welcome to do that. It just depends on how you want to structure these. But for this example, I'm going to use the highest rate available, worst case scenario, 7.75. That has a lender credit of $4,900, 1 point going back in lender credit. So let's break that down for the forgivable boost DPA. Same example, same lender fee, same compensation, same closing cost. That is going to come to a cost of $23,000, but then you have your lender credit of about $5 grand on this day's pricing, and that is going to lower the cost down to just over $18,000. They could get a seller credit of 4% on this and come to the table with nothing. If they were only able to get 3% in seller contributions, then they would need to bring just under $4,000 to the closing table. So you see the cost on the forgivable DPA are a little bit less than the grant, which the grant is not going to have a second mortgage. It's not going to have a second lien, whereas the forgivable DPA is not going to have a second mortgage payment, but it is going to have that second lien that is forgivable after a certain amount of time of on-time payments on the first mortgage. Now let's take a look at the one that has the most help towards closing costs, which is our repayable DPA. That is by far the most popular one that we close here at Orion because it does have the most assistance towards closing costs. So same pricing example, same compensation, same closing cost, but the lender credit is a lot higher. So it's going to bring that $25,000 in cost down by $16,000 to $8,500. So they could look at this if they had absolutely no seller contributions, then this repayable DPA is still a viable option because the down payment is covered, and even with no seller contributions in this example, they would only have to bring $8,500 to the closing table. If they did have a little bit of seller contributions, let's just say 2% in this example, then they would bring absolutely nothing to the table. So this repayable DPA for FHA is a great way to reduce your borrower's costs down to often nothing with down payment assistance. Now, we want to take a look at manual underwrites for FHA because a lot of these do refer. So this is what HUD requires, regardless of down payment assistance or not. This is what HUD is looking at on an FHA refer. They cannot have any housing or installment lates in the last 12 months whatsoever, squeaky clean on that, although they can have 2 30-day lates total the year prior. No new installment or utility collections in the last 24 months, and that includes charge-offs as well. You're looking at the open date on the credit report for those. Revolving is a little more flexible on a manual underwrite, so we're only doing a 12-month look back on collections and charge-offs on revolving accounts. And then on a manual underwrite that refers in DU, HUD caps you at 31/43 with no comp factors. You can go up to 37/47 with one comp factor, and up to an absolute max of 40/50 with two comp factors. Comp factors can be things like income that the borrower has and we have it documented, but we're not using it to qualify. It could also be like 3 months reserves, or someone lowering their housing payment, or if they're meeting residual income requirements. All manual underwrites require at least 1 month of reserves after closing. Another really popular program that we're offering right now is our conventional grant. We don't offer down payment assistance for conventional, but we do have the grant, and we offer these as 1%, 2%, or 3% grants, and they can go all the way up to 97% per normal conventional guidelines on the LTV, and then use the grants to cover all or a portion of the down payment. I'm pricing an example here with a 740 score. We do these all the way down to a 620 score for conventional. They, of course, need a DU approval. This is pricing with the 1% grant, which is going to have the most assistance towards closing cost. And then we have the 2% grant, which is going to be more assistance towards the down payment, but you can see the pricing difference has less credit towards closing costs. And then up to the max of the 3% grant, which is going to cover all of the down payment if you're doing a 97% loan, or a hefty part of the down payment if they're doing a 95% loan. But the help towards closing costs is going to lower based on the pricing credit. Just a reminder, you can click on show all rates and expand out a full rate stack for each loan program shown here. Our system just collapses the rates to make it easier to look at when you're comparing different options. Now, we also do this for Home Ready. So if they're eligible for Home Ready, you can do the grants for these. And Home Ready pricing is usually a little bit better than regular conventional. So you can see even more lender credit here with the 1% grant, the 2% grant, and the 3% grant. I want to show you a breakout of the funds to close here for the Home Ready example. So we're going to look at 7.375 that has a lender credit of a little bit over 1%. And let's break this out. So we've got our lender fee. Let's use borrower paid comp at 2.75. Let's use the same 10 grand in closing costs. So they're going to have costs that so the down payment here is covered because we're doing 97% Home Ready. We have the 3% grant. What's not covered is your other normal cost shown here on your screen. So we have the lender credit at that rate of 7.375 of a little over 5 grand. So that reduces our total cost down to 19 grand. If you have seller contributions, which again, I cannot stress enough, if you're doing forgivable down payment assistance like with FHA, or you're using a grant for FHA or conventional, try very hard to get seller contributions on the contract. That will really help keep the costs down that the borrower needs to bring to the closing table. On this example, if they get the max 3% in seller contributions, which is 15 grand, they will only have to come to the closing table with about $4,600, which is awesome. So this is a really, really good opportunity to help those conventional borrowers. Now I have this cheat sheet that I can send you guys. Please shoot me an email. It kind of recaps everything that we've talked about as well as the basic requirements. So just shoot me an email and I will get that over to you. We also have USDA assistance. So USDA is already 100% financing, but they can use that assistance towards closing costs if they don't have seller contributions on the contract and need it. We have a fantastic broker marketing studio for you guys. I would love for you to check out. So when you log into our portal, you're going to see and hop into our marketing studio. We have tons of pre-designed materials. These are sharp looking materials. It's your branding. You're going to import your logo if you want, and your photo, your information. It's going to auto-populate on everything. They're fully customizable. English or Spanish. You can co-brand with your builders, with your real estate partners. we have some AI technology in there. So if you're doing an open house flyer for your realtor, it will automatically pull in some of the photos and some stats on the property. And we have flyers, social media posts, all kinds of stuff. I highly recommend you get in there and check it out. You're just going to jump into our portal, click on Marketing Studio. These are examples of some of the materials that we have in there for you, and these are for all loan programs, not just grants and DPA. We've got all kinds of stuff for all of our programs, including our DSCR, which has excellent pricing. If you haven't priced us for your DSCR loans, you definitely want to do that. That's a huge niche for Orion. We have a whole separate team that handles DSCR. We really specialize in those. Here's some examples of flyers that you can design for your realtors. It's awesome stuff. Please let me know if you guys have any questions. Reach out to me by phone or email. Check me out on social media at Behind Closed Loans. I've got some full-length trainings on YouTube that you can check out, as well as some funny short stuff on TikTok and Instagram. I would love to partner with you guys on your next DPA or grant loans. So please keep in touch and let's close more loans.